Are you looking for Europe's best P2P lending platforms? Look no further. My name is Jakub from P2P Empire, and I've reviewed and tested over 30 different P2P lending platforms in Europe. In this video, I will compare some of the most interesting P2P lending platforms to help you find the best fit for you. Before we get started, I want you to know that this video is based on my own experiences with individual platforms. I'm currently investing on all of them, which gives me the advantage of being able to see differences, pros as well as cons with every single platform. So this video is not simply a comparison of features, but also of my own experiences. When it comes to P2P lending platforms, I always aim to evaluate the ratio between risk and return based on data such as the average interest, protection scheme, and loan type. These are the primary criteria that I look at. The secondary criteria are the availability of loans, a secondary market, an auto-invest feature, consumer support, and the overall trust factor of every P2P platform. The secondary criteria help me to determine whether my funds will be always invested, whether I will be able to sell my investments, how much time I will spend investing, and whether I can rely on the support to resolve questions and potential issues. Before I will introduce you to some of the best P2P lending sites, I would like to point out that there is no guarantee for any specific returns and that P2P lending always comes with certain risks. You should educate yourself about how to minimize those risks and conduct your own due diligence of every P2P lending site before you invest your money. The P2P lending space is also changing very fast, which is why you should always monitor the development of your P2P lending platform and verify the information in this video before you act on it. So let me introduce you to some of the best P2P lending platforms that made the list. Note that this list can always change. Have a look at our website p2pempire.com to verify whether the information is still accurate. Let's start this comparison with PeerBerry. PeerBerry is a Latvian P2P marketplace that lists mainly short-term loans from an established financial group called Iuvo Group. The P2P marketplace was launched in 2017, and since then more than 23,000 investors earned around €3 million in interest. You can expect to earn around 10% interest per year, which is, however, always subject to market conditions. Your investment is protected by a buyback guarantee as well as a group guarantee, offered by the loan originator as well as the financial group. Considering the very good performance of the platform and the high demand for investment opportunities on PeerBerry, the loan availability is still very good. There is, however, no secondary market. So in case you want to withdraw your money, you will need to wait until the end of the loan term, which is typically around 30 days. PeerBerry support is really good. They were always able to resolve any of my questions very fast. I also had the chance to talk to the CEO of PeerBerry as well as to the CFO of Iuvo Group, which increased my trust in the marketplace. The advantage of the platform is the buyback guarantee, which holds up very well so far, since Iuvo Group has enough financial means to cover it. PeerBerry also processes any withdrawals within a few hours in case you want to withdraw your uninvested funds. As I have reached the silver status on PeerBerry's loyalty program, I also get an additional bonus, which is an increased interest of 0.5%. The returns have been very stable over the last 2 years of investing, and there has been minimal cash drag, which means that my money is almost always invested. The biggest benefit of investing on PeerBerry is the fact that PeerBerry's loan originators are exclusive on PeerBerry and you can't invest in them elsewhere. Learn more about why I think it's an advantage in our PeerBerry review. A disadvantage could be the limited diversification options. Not all lenders on PeerBerry have available loans, which means that sometimes you might get overexposed in certain loan originators. You are also investing in short-term loans that are not backed by any collateral, and there are no instant withdrawals such as offered by Mintos or Bondora. As for myself, the advantages on PeerBerry outweigh the disadvantages, and I appreciate that PeerBerry is able to deliver on its promises, which cannot be said about bigger platforms like Mintos. The next P2P platform is EstateGuru, which is actually not a marketplace but a P2B platform. The P2P lending site funds real estate projects which are backed by a first-rank mortgage. The platform funds projects from the Baltics but also Finland, Spain, Germany and Portugal. You can expect to earn around 11% interest per year, and most of your investments are protected by a first-rank mortgage. EstateGuru offers a secondary market in case you are keen to sell or buy investments from other investors. Note, however, that there is a secondary market fee of 2% that you have to pay in case you decide to sell your investments. You can also only sell the entire claim rather than just a part of it. The availability of loans on EstateGuru is very dynamic. Depending on your investment amount, it can take months to build a fully diversified portfolio. While on many P2P lending sites, you can start investing from only €10, on EstateGuru you have to invest at least €50 into a project, which is not a tragedy since your investments are backed by a mortgage rather than a buyback guarantee. EstateGuru also offers an auto-invest, which is not, however, something I would recommend using, at least not until you get familiar with the platform. To find out why, watch my EstateGuru review, where you can learn more about this P2P platform. The benefit of investing on EstateGuru is obviously the fact that your investments are secured by a mortgage, in comparison to most other P2P lending sites. This makes your investments safer. The disadvantage is limited diversification, and if you are following a short-term investment strategy, you won't be happy either, as most of the loans on EstateGuru have a duration of at least 12 months. The platform has currently more than 56,000 investors, which earned more than €17 million since 2014. None of the investors suffered a loss so far, which is also something worth mentioning. So EstateGuru and PeerBerry are probably the safest P2P lending sites at the moment. If you are planning to invest a large sum of money, you might want to also diversify across other platforms. I will create a dedicated video about the diversification within a P2P portfolio in the future, so make sure to subscribe to this channel to not miss it. So let's show you a few alternative options. Debitum Network is a rather small P2B marketplace, which means that you can invest in business loans from other lenders. Your money will therefore be used to scale businesses rather than pay for consumer goods, like it's the case when you invest in consumer loans on other marketplaces. Your investments on Debitum Network are secured by a buyback guarantee, as well as collateral, and in some cases even an insurance. Debitum Network is known for its due diligence of lenders and monitoring of their performance. The platform was the only P2P player that suspended a 40 finance and paid the money back to the investors, while bigger platforms like Mintos and VIAINVEST were not that quick. Debitum Network is also currently the only platform that publishes regular financial evaluation of their lenders. This data is really useful when you set up or update your auto-invest. Higher protection comes, however, with a cost. The annual return on Debitum is only around 8.5%, which is certainly smaller as on PeerBerry or EstateGuru. The liquidity aspect is also something you should consider. Debitum Network does not have a secondary market at the moment, and the business loans usually come with a loan term of at least 6 months or longer. If you're coming from a P2P marketplace where you're investing €5 or €10 per loan, on Debitum you will need to adjust this diversification strategy, otherwise you will suffer from cash drag. The P2B marketplace recently increased the minimal investment amount into a single loan to €50. The minimal deposit amount was also adjusted from €100 to €500, and this makes sense. At the end of the day, there is no benefit of investing a lower sum of money. A €100 investment will yield you €90 per year, which is not worth the time and risk you spend on P2P lending. Debitum Network was founded only in 2018, so it's not as established as other players. There are currently also just 5,000 investors on the platform. While I don't think that Debitum should be the first P2P platform to start with, it could be a suitable addition to your portfolio if you want to diversify in different loan types. Moving on to Iuvo Group. Iuvo Group is a Bulgarian P2P marketplace owned by Easy Asset Management Group that owns multiple lenders in Bulgaria, including Easy Credit, iCredit and Viva Credit, which all use the Iuvo platform to fund their loans. Iuvo Group also lists loans from other lenders such as Ibankar, Quiku or Monify, which you can find on other P2P marketplaces. What's unique to Iuvo Group is the fact that all lenders have at least 30% skin in the game for all their loans listed on the platform, which in theory should decrease the risk of default as the lending company is motivated to recover the debt. Personally, I only invest in loans from Easy Credit as they have the highest availability of loans and solid financials for 2019. Iuvo Group is a suitable platform if you want to diversify across consumer loans from profitable lenders in Bulgaria. The platform has been operating since 2016 and at the moment more than 21,000 investors earned over €2.6 million so far. Let's now have a look at Bondora. Bondora offers various investment products that allow you to invest in unsecured consumer loans. Bondora is not a P2P marketplace but a P2P lending platform. It means that it lends money directly to borrowers instead of funding loans from other lenders. Bondora funds currently only loans from Estonia. The P2P lending site has stopped originating loans in Spain and Finland just a few months ago, which I think was a good decision considering the performance of those loans. Bondora's most popular product is called Go and Grow. This product offers you a compound annual interest of 6.75% and instant liquidity. And instant liquidity in Bondora's case means that you can withdraw your funds within 1 minute. That was at least the case during my recent Bondora's Go and Grow liquidity test. Now, Bondora's Go and Grow likes to be compared to savings accounts. In terms of risks, it's definitely nothing like a savings account. As you might know by now, investing in loans is not risk-free. However, in terms of liquidity, I believe that there is really nothing that can compare with Go and Grow at the moment. Surely, this promise of liquidity is no guarantee, but during normal market conditions, this product is certainly a good way to get some interest on your cash instead of letting it lose its value due to inflation on your bank account. Alright, so we have covered some of the most reliable platforms so far. We talked about platforms that offer all kinds of protection schemes. But what about a platform that gets rid of all of the securities? This would mean higher potential returns, right? One of those platforms that allow you to invest in loans without a buyback guarantee is NeoFinance. NeoFinance offers investments in consumer loans from Lithuania. The platform was the first P2P player that started offering dedicated IBAN account numbers to its investors within the European P2P lending market. This means that your uninvested funds are not stored at separated business accounts, but on your own bank account. NeoFinance allows you to invest directly without any protection schemes or use an optional provision fund, which means that NeoFinance will pay you the loan principal in case the borrower is late with the payments even for 1 day. The thing with this provision fund is that you need to pay for it upfront, which drastically decreases your returns to a total return between 3 and 8%. This is something I have learned after starting using it. For future investments, I will experiment without the provision fund to see how good NeoFinance deals with the recoveries and what will be the net annual return of those investments. There is also a secondary market. However, NeoFinance charges a 1% fee for buyers and sellers, so by using it, you will further decrease your returns. NeoFinance is certainly not suitable for beginners, but rather seasoned investors who want to benefit from the increased safety of dedicated IBAN accounts and Lithuanian regulations, which are much stricter as regulations in Latvia or Estonia. VIAINVEST is an established P2P platform that funds short-term loans from its financial group VIASMS Group. This Latvian P2P lending site offers investment opportunities in loans from Sweden, Latvia, Poland, Vietnam, Romania or Czech Republic. Personally, I only invest in Swedish and Latvian loans at the moment. My experience with VIAINVEST has been good so far. While the diversification isn't the best, you are able to generate annual returns of 12%. Your investments are secured by a 30-day buyback guarantee, which has worked fine so far. VIAINVEST can be a good alternative if you want to increase your exposure in consumer loans from Latvia or Sweden. Currently, there are around 18,000 investors investing on VIAINVEST. So this was an extensive introduction to what I think are the most interesting platforms at the moment. I am currently investing on 17 P2P lending sites, and going through every single platform would make this video very long, which is why I will publish dedicated reviews of individual platforms in the future. If you want to see more suitable options, head over to our P2P Lending Academy at P2P Empire, where you will find more alternative platforms. I've added the link in the description below this video. So now you might be asking how much to invest in which platform. Well, it all comes down to your preferences. One of the ways to compare the platforms is to look at the risk, liquidity and returns that every platform is offering. PeerBerry is a great platform to start with. It offers solid returns, moderate risk, and you can withdraw your investments within a few weeks. EstateGuru is a good platform if you want to increase the safety of your portfolio. It's suitable for investors who already have at least some experience with P2P lending and don't mind waiting a few weeks to months to build a fully diversified mortgage-backed P2P portfolio. Bondora's Go and Grow is great for beginners who want to have fast access to their investments and don't mind the lower returns. Debitum Network is a good alternative for experienced investors who want to lower their exposure in payday loans and want to diversify in secured business loans in exchange for lower returns. Iuvo Group is a good marketplace for investors who want to invest in loans from Bulgaria. NeoFinance is good for experienced investors who are keen to get a higher interest in exchange for a higher risk. VIAINVEST is a good alternative to other P2P lending sites that offer short-term loans with a buyback guarantee. It's also a good option if you want to increase your exposure in Latvian and Swedish loans. So this wraps up some of the best P2P platforms at the moment. As the P2P lending space is changing very fast, I encourage you to do your own due diligence before you decide to sign up and invest your money. Some of the P2P platforms offer cashback bonuses. These bonuses give you a small investment boost. You will get those bonuses only if you sign up through our links in the description below this video. Let me know which other P2P lending sites you would like to see on this list and why in the comment section below. If you like this video, hit the like button and subscribe to this channel to not miss any future videos. Thanks for watching, and I will catch you in the next video.